News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, let's begin with blowout earnings from a pair of tech heavyweights, Microsoft and Meta Platforms. Starting with Microsoft, those shares are trading at all-time highs, and if it holds, the tech giant would become the second company in the world to reach a $4 trillion valuation. Microsoft's latest results confirm it is leading in artificial intelligence with a 39% rise in sales for its cloud business. Dan Ives is Global Head of Tech Research at Wedbush Securities.
Massive beat on cloud. You see more and more of these use cases, these hyperscalers, those are the best indicators. That just shows where the next spending in AI is going. And that's why right now, if you're a tech bear, you're in hibernation mode in that cave and you can't find AI in the spreadsheet.
Dan Ives at Wedbush has raised his 12-month price target on Microsoft to $625. Right now, the shares are trading at $556, up 8.33%.
Well, Nathan, shares of Meta also surging this morning. They are up more than 11.5%. The Facebook parent reported results that beat estimates. Meta is also taking advantage of strong advertising and stepping up spending next year. Executives say now is the time to seize on investment opportunities in AI. Mandeep Singh is senior tech analyst for Bloomberg Intelligence.
There is a sequential acceleration in ad impressions as well as ad pricing growth. And to my mind, that is a sign of them applying AI to boost engagement. Obviously, the user growth has been almost the same every quarter, 4 to 5%. So the fact that impressions grew 11% is a sign that people are spending more time on their family of apps.
Mandeep Singh at Bloomberg Intelligence says Meta is also forecasting third quarter revenue that beat Wall Street estimates.
Well, Karen, one big tech stock is not participating in the rally this morning. That would be Qualcomm. Those shares are down 6% pre-market. The biggest maker of chips that run smartphones reported lackluster growth, fueling concerns that tariffs will take a toll on Qualcomm and the broader chip industry.
Well, up next, Nathan, we get more earnings from big tech. After the bell, results come in from Apple and Amazon. Bloomberg's Tom Busby tells us what to expect from the iPhone maker.
Despite this period traditionally being one of the slowest of the year before it releases new products for the holidays, the iPhone maker is projected to report modest sales growth after adjusting some of its manufacturing to offset the impact of the Trump tariffs. But Wall Street is expecting continued sluggish demand for gadgets like its TV set-top boxes and the Vision Pro mixed reality headset. And investors will want to hear more about its AI strategy after more of its AI talent was recently poached by Meta. Bloomberg consensus calls for revenue of $89.3 billion on earnings per share of $1.43. Tom Busby, Bloomberg Radio.
All right, Tom, thank you. Now, when it comes to auto earnings, Ford is taking it tough. Those shares are down nearly 2% in early trading. Ford's warning profit will see a sharp drop on the fallout from President Trump's tariffs. We spoke with the CEO, Jim Farley.
What we're working with the administration is to take that layered tariff, because autos have their own tariff, plus they're subject to all these other tariffs. We're working with Commerce and the Trump administration to minimize our tariff expense so that we can get more competitive.
Ford CEO Jim Farley says adjusted earnings could fall as much as 36%, due in part to a net tariff impact of $2 billion. That's about $500 million more than Ford previously expected.
Let's turn to the economy now, Nathan. Specifically, the Federal Reserve. Despite pressure from the White House, the Fed kept its key interest rate unchanged yesterday. The central bank said growth moderated early this year and that uncertainty remains elevated. And here's how Fed Chair Jay Powell put it.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen.
Fed Chair Jay Powell also answered questions about two members of the Monetary Policy Committee dissenting. It's the first time that's happened in over 30 years. Governors Michelle Bowman and Christopher Waller both voted for a quarter-point rate cut.
Well, Karen, let's get some details now on a hot and cold relationship between Wall Street and the White House, because it's turning warmer, apparently. J.P. Morgan Chase CEO Jamie Dimon and President Trump are talking again. Bloomberg's John Tucker joins us in New York with details. So, John, they're back on speaking terms.
It looks like it. We're now learning that Dimon met with President Trump at the Oval Office last week to talk about the economy, trade, and financial regulation. Trump picked Dimon's brain on the prospect of lowering interest rates, too. And they also touched on the administration's push to impose tariffs. The renewed dialogue actually started in June after years of tension. You'll recall that back in 2023, Trump called Dimon highly overrated, and Dimon urged business leaders to back Nikki Haley in the GOP primary. He's also the president has accused J.P. Morgan of discriminating against conservatives. When the president's April tariff announcement sent markets plunging, Dimon said a trade war risked plunging the economy into recession. Well, the president did take notice. He reportedly cited Dimon's comments as a reason for pausing the tariffs. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, now to the latest on trade. With 1 day to go until his tariff deadline, President Trump has made a flurry of deals and demands. Last night, he announced a 15% tariff on South Korean imports, including cars. That matches the rate Japan agreed to last week. And we get more from Bloomberg's Denny Thomas in Seoul.
Seoul has been lagging behind in all these trade talks because of the political chaos we had here. And as we were hitting up to this August 1st deadline, it was pretty uncertain whether we will reach a deal or not.
And Bloomberg's Denny Thomas reports the agreement also includes a $350 billion fund for South Korea to invest in the U.S. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.